Welcome to Turning Hard Times into Good Times. I'm your host, speaking to you from New York City on this, the 6th day of August, 2019. And we want to thank you for listening to this show, making it one of the more popular shows on the Voice America Business Channel. Want to also encourage you to send along your comments to questionsfortaylor@gmail.com. Questions, the number 4, Taylor@gmail.com. We do want to thank our sponsors for making this show economically viable. Our sponsors for this week are Radisson Gold Mining, Novo Resources, Great Bear Resources, and Klondike Gold. I think it has become increasingly clear to regular listeners to this show that Michael Oliver's proprietary momentum and structural analysis is extremely valuable. I know his very solid, non-objective appraisal of the markets, most important to listeners to this show, has been very helpful, and that is likely true for any markets, not just gold, which is one of our main focuses, of course. While many technical analysts have waffled from bull one day to bear the next in the gold markets, whipsawing investors in and out of the yellow metal and the companies that produce the yellow metal, Michael has confidently told us, based on his tried and proven proprietary techniques that he uses, not to worry. A major bull market in gold lies ahead, and without any doubt, he told us, that the equity markets are in for a huge decline. Michael is kind enough to spend a few minutes with us each week to help us avoid being whipsawed in and out of our gold investments and to any other number of markets as well. He has given us the big picture, which is most important to me as an investor in junior exploration companies. If you feel you have benefited from Michael's words on this show, I would strongly suggest that you go to olivermsa.com, to watch a video in which he explains and provides a visual explanation of his methodology and that he uses that has been so effective over the years. And if after watching Michael's explanation of the way he works, you feel you can benefit from his work, which covers pretty much any market of significance, then I strongly suggest you consider subscribing to his letter. Again, it's olivermsa.com. Now that I've given a little plug for Michael's letter, I'm going to talk about my own a little bit. I do expect to do so more often now as we move into this bull market because, quite frankly, the junior mining sector is becoming very, very exciting. In fact, I'd like to just give you an example of one very exciting story. In fact, it happens to be a sponsor of this show, Klondike Gold. It just announced this morning 1 meter intercept on its project up in the Klondike, in the Yukon, in the great Klondike gold discovery, placer gold discovery of the late 1800s. It's been doing work there, as you're well aware, if you've listened to my discussion with this company in the past. This morning they announced 1 meter, a drill intercept that graded 1,009 grams of gold per ton and 1,035 grams of silver per ton, from a relatively shallow depth on the company's Klondike Gold project. In fact, the company has now found what is definitely the mother lode source for at least a part of the massive Klondike placer gold discovered in the late 1800s. This is an extremely exciting story. And prior to the show, Peter Talman of Klondike contacted me to see if he might be able to come on the show today to talk about this new gold discovery. But in fact, we already had Chris Taylor, the president of another very exciting exploration story, Great Bear Resources, scheduled today to be on my show. In fact, we'll be talking to Chris after the first commercial break in just a few minutes from now. However, this morning I was able to pre-record an interview with Peter Talman, an interview that you can listen to at the podcast page at jtaylormedia.com, jaytaylormedia.com. The podcast page there, Peter explains the significance of this phenomenal drill intercept and how he plans to continue to develop that huge property through the end of 2019 and beyond. So if you're interested in this stock, and I think you well should be if you have a speculative inclination of junior exploration companies, that you go to jtaylormedia.com and listen to what Peter has to say about the significance of this really outrageously high gold intercept that he reported this morning. By the way, before I talk about today's show, I should put in a plug for the Metals Investor Forum, which will be held on September 6th and 7th in Vancouver. I will be there, and several other newsletter writers as well. We'll bring our favorite gold mining companies to that conference. Go to jtaylormedia.com and click on that, on the Metals Investor Forum banner there on the homepage of jtaylormedia.com. Space is limited for this event, so all you need to do is register for it to make sure you have a seat at this event. I would strongly suggest you do that. And I bring this up in part now because Great Bear Resources, which I learned about at about 10% of its current price, I learned about at the Metals Investor Forum. So lots of other companies are there too. That the newsletter writers bring their favorites to this event. And these are independent newsletter writers that are not paid to say nice things about companies. So this is why I think the Metals Investor Forum is an outstanding event. jtaylormedia.com to sign up for it. Now, let me get on to today's show. I've titled it, A Compelling Case for Dollar Destruction and Hyperinflation. John Williams, Chris Taylor, and Michael Oliver, as I said, all those are our guests for this week. As Alistair McLeod has explained on this show in the past, the Chinese government has observed that global chaos following America's military activities and or financial crises have caused massive debt that is caused by massive debt money creation by the Federal Reserve, usually results in a massive amount of capital flowing into U.S. treasuries, and that in turn then strengthens the dollar following these destabilizing events. At the same time, the Chinese, the Russians, and other adversarial nations are sensing that the dollar's status as the world's reserve currency may be nearing an end because of its constant creation of debt-based money, which, while providing temporary relief it is essentially a pathological event leading to the dollar's self-destruction. Indeed, the global dollar system is taking on debt on an exponential pace, while income to service that debt is growing at a snail's pace. The handwriting then would seem to be on the wall. The dollar's days are numbered, or so says John Williams, who is our main guest. And he's believed for some time that given the unsustainable amount of debt that the U.S. government is taking on, combined with the off-balance sheet promises for such things as Social Security and health care, etc., for its aging citizens, that we will reach a point in the not-too-distant future in which the U.S. will have no choice. There will be no borrows of U.S. Treasuries, at least not enough to pay for the enormous amounts of debt. Therefore, John argues that we are going to see a massive amount of inflation in the currency, and ultimately that means that your dollars will continue to buy far less than they have in the past. Well, the mainstream view doesn't agree with John, so we're going to ask John to defend his thesis against some of the most prominent arguments against the hyperinflation theory. So, as I say, John will be with me in the second half of today's show, and as just noted, Chris Taylor will be with me right after the first commercial break. But right now, I'm pleased to tell you that I have Michael Oliver with me once again. Thanks for joining me, Michael.
Hi, Jay. Good to be back.
Always good to have you here. I really want to ask you about the dollar because, as I just noted, our main guest today, John Williams, makes the hyperinflation case because he thinks the dollar will become essentially worthless. Now, maybe the dollar isn't worthless vis-a-vis other currencies completely, but in terms of what it will buy, perhaps all fiat currencies, which are based on nothing really except debt, will become defunct. But in any event, maybe putting on your technical analysis hat, what do you see for the dollar at the moment?
Well, it's one of the asset categories. I mean, it's major. Foreign exchange is major. Okay, and we're talking dollar index, which means the inverse of that it would be the euro, the Japanese yen, and the British pound in that order of importance in terms of their weighting within the dollar index. Dollar index, in our view, broke down into a negative annual momentum trend in the spring of 2017 as price dropped from 103.50 down to 99. So a 4% drop off the high. It broke annual momentum structure that went back like a decade. It then continued to drop to about 88. So it's a significant drop. That was in early 2018. It made a low, and then it had a rally. And that was what we might call not a long-term trend rally, but a counter-trend rally to the breakage that had occurred earlier in 2017. They rallied up to 97 on the dollar index, and that was August a year ago, so 13 months and counting, okay? It's trading around 97 right now. But there's all this talk about the strong dollar, and as you look at a simple chart, it's oscillated in a narrow range, 1% or so above and 1% or so below the August high of last year. Now, it's held steady. It's a firm, situation. You look at the chart; it's sort of gradually rising, but it keeps trading around that 97 level, which means around where it was a year ago. Now, but everybody's talking about strong dollar. Now, it's not weak, but on the other hand, gold said, I don't care. And so you went from 1160 level in August of 2018, when the dollar was at 97, dollar index, and now you're up in the upper 1400s with no help from the dollar being weak.
Yeah.
No assistance from the dollar. It's a major technical situation now in our view that if the dollar weakens just about a half a point below today's traded low, in the cash dollar index, we think it's going to bust a gut and break down. It's going to start to give back rapidly the rally that it had in the first half of 2018 that really hasn't extended since then. And so we think there's a big number not far below today's traded low that if it's hit, all of a sudden you're going to see the major foreign exchange markets wake up in terms of volatility and direction. And we think the direction for the dollar will be down, and we think it could be a fairly rapid drop once you hit that number. We think also that could be coincident with, probably will be coincident with, another rapid drop in the S&P. We just had one over the last week or so. It's probably going to stabilize for the next day or two. That's our best guess. And we think the S&P could be ready for another big drop. And when I say big, visit the video on our website, olivermsa.com. It shows you as soon as you go to the site. This is how big we think it's a move of the century, possibly. But that one major asset category, foreign exchange, at least the major foreign exchange currencies, have not been playing at all over the last year. They've not created any volatility or any major trend direction. And we think that's about to change. I think it's right below our tippy toes. And we'll see.
Yeah. Well, I guess in terms of real money, gold, and asset-based money, the dollar has been weak, actually, not strong. Because, as you point out, the gold is continuing to rise. It's risen fairly dramatically, as you've been predicting, as your work is suggesting it would. And the dollar hasn't gone anywhere in the last year, as you say. So it's you'd say it's breaking down. So what about, Michael, money, the safe havens? There's T-bills, or T-bonds, I should say. Well, T-bills too, but T-bonds, which you follow closely, the long-term, long-dated U.S. dollars. The yields are coming down dramatically as well. The bonds, the T-bond is strengthening tremendously. How much longer can the T-bond perform than if we're going to have a weak dollar? It would seem to me at some point.
We turned bullish. First of all, we turned very bearish on T-bonds in 2016. T-bond futures, and they had a huge drop after that until a low late last year. In December last year, T-bond futures were at 140, turning up from a low. And at 141, we said, okay, though we're bearish on the long-term view, in other words, higher yields, lower price.
Right.
Ignore that for the time being. We said there's going to be an advance here that is worth participating in. And T-bonds now are over 160, T-bond futures. And they're acting in a vertical manner. They're not acting in a slow trend. They're acting like a volcano. Now, why is it that people are grabbing long into the debt market aggressively? What do they perceive out there in other asset categories that causes them to shift assets into long-term U.S. government debt? I think actually that rally in the T-bonds will probably end when the S&P produces something dramatic on the downside. And I think whenever the S&P produces that, and again, go to the video, it could be rapid and very dramatic, in which case you get one of these bottle rocket situations where flight to safety is so overwhelming that it's just straight off the page on T-bonds. But at that point, you could get a situation where the T-bond rally does stop because it gets exhausted. It's done its job of moving, escorting money out of the S&P. And the S&P makes a low at some dramatic level, and you get an opposite move, in which case the T-bond rally could end at that point. I don't think that will end the gold rally. But the T-bond rally, I think at that point, being inverse presently to the S&P, could change. But for now, T-bonds are still very strong. They're acting like the S&P's rallying today. We don't care. So Same with
Well,
gold.
do you think if we get that equity market decline, that the dollar might go along with that, and
yes.
that also could cause a loss of confidence? Why to hold T-bonds if the dollar is losing its value dramatically?
Yeah, it could discourage any foreign investment in U.S. Assets, such as the U.S. stock market, which has definitely been favored by foreign investors because it beat the pants off of the European markets, the Japanese market. So there's a lot of foreign money in the U.S. stock market. If you cause the dollar to pinch them, not just the S&P, which has been pinching them, if you pinch them with the dollar, yes.
Yeah. Okay, Michael, we're out of time, but if you could just tell us real quickly with regard to the gold, because gold has really been running here. Are we through? What would be the major resistance levels that you're looking for now?
I'm uncertain on that, but I think you're not anywhere near it until you get well up into the 1500s.
Okay.
And again, I'm talking about a congestion or a pullback, not any end to the advance.
Okay, very good. All right, thank you so much. Thank you so much, Michael, for being with us again. Always appreciate it.